Clay Patton on the Rural Radio Network as we're back with Darrell Holaday of Country Futures in Frankfort, Kansas to take a weekly look at the trade. And Darrell, these grains are really struggling here to round out the week. Livestock, though, having a good session overall. Are we seeing a little bit of difference in money flow coming into the end of the year?
Well, definitely seen that. It was one of the more interesting weeks you would see, especially in the grain markets, in that we started higher. As a matter of fact, led by the soybean complex. Sharply higher as the soybean oil market continued to just pull this market higher. Again, we had higher crude oil generally, and that pulled that market higher. And then Tuesday afternoon or evening came along, and it kind of changed the whole tone. And the reason I point that out is Wednesday was first notice day on deliveries, and that, deliveries during December. There's lots of months they're all important. December deliveries tell you a lot about where we are in terms of the futures and the cash, the overall, whether we're overpriced, underpriced. I think in the past couple of years, December corn, for example, there may not have been any deliveries, or if somebody delivered, they just stopped them and we just kept on going higher because we'd start lower. Lot different story this year. And it started with the soybean oil. And we had their general opinion was that you'd find in the trade for several weeks, actually, the cash soybean oil is 78 to 80 cents, 5 cents above where the futures market is. Well, right out of the chute, you get 500 lots of contracts of December soy oil delivered Tuesday night, and that just changed the whole tone, the whole week, I think, because deliveries were big across that. The soft red winter wheat was big. In Chicago, over 1,200 contracts on the first delivery day. And just kind of snowballed, because what it's telling you is you think the cash market's that high, it's not. And because people don't make delivery on futures at 75 worth 80. That doesn't happen. It's the great proving ground of what the real trash price is. And so we saw that first round of deliveries that put things kind of on the defensive. And then here came the corn deliveries were there too, but then they got bigger. And most importantly, as I mentioned earlier, there were no stoppers. And what I mean by stoppers is nobody says, okay, you give me those things, I'll take them, and I'm not redelivering. In most cases this week it was, oh, my, I got delivered on. Oh, I don't want it. I got to sell it and redeliver it. They weren't wanting the cash possession. And a lot of that tied to the fact that the river market is a very weak market this year. But the interior market has pulled it all the way with the stronger basis levels in corn specifically, and to the fact that the river levels are so low, and it's put it at such a discount, such a premium to the other world market, that's why the corn, for example, at the river was not worth as much as people thought it was, and that's why those who owned it decided we'll deliver and let the longs take this at these price levels, and that's what happened. And so in the end, if you look specifically at corn, there were a lot of things happened this week. There were dramatic shifts. Just a week and a half ago, there was barely any carry from Dece to March. When we ended on Friday, we had 11 cents at one time. On Friday, we were up to 15 cents carry. So we went from an inversion to carry, and that's exactly what happens when you find out you don't want it right now. And just as importantly, we saw plains, the basis from really the Midwest all the way out through the plains break about 20 to 30 cents across the board. We haven't seen a weakness in the basis at all for a long time. And so the whole structure of the corn market changed. Soybean structure changed because soybean oil was under pressure. And that's really where it pushed everything down. Then just to round things off Thursday night, we got 500 contracts of the hard red winter wheat delivered against the Dece contract, which we had none up to that point in time. Somebody was sitting there saying, well, we'll let you have these too. So the grain markets were on the defensive all week. After the peak early in the week, we're under pressure. Ironically, the soybean complex actually closed just slightly higher, but they were up 40, 45 cents to almost 50 cents at one time on the week before giving up ground as this all took place. And so that really was the story. There's weather. We watched the Argentine weather. We're seeing some moisture at the middle of the week. It's going to turn hot and drier. But generally, when it came to the end of the week, the 10 to 15-day forecast is a little bit wetter for Argentina. They're just trying to get timely rains. On the other hand, Brazil has so far still had one of those fairy tale years where everything has worked out well with them. They got it in early. They've had good moisture, and that crop's off to a great start. But Argentina will be the real question as we continue to move forward. On the week, December corn down 33 cents at 6.35. March corn was down 25 at 6.46. January beans up 2 on the week at 14.38. Once again, after being up to 14.75 one time. March soybeans 14.46, 4 higher on the week. December Kansas City wheat down 40 at 8.82. The March contract 8.59 down 35. January crude oil up 3.30 on the week, closing at 79.98. That's after spending a significant amount of time above $82. On the livestock side, there was really little change in the live cattle futures, or significant change in the feeder cattle. Generally steady cash. You could kind of feel that we're real aggressive. Packers were aggressive when they got going on Wednesday, bidding for cattle. But then when the market got high enough, they just finally, late in the week, I felt like maybe it got a little bit. It was just a softer, or maybe called. It just felt like a weaker tone that they got what they needed, and they're going to look at cutting kills after next week, I think, because they've been really aggressive here for several months. We really kind of think that the cash market has probably peaked for this period of time. Wouldn't be surprised if we're just a little bit weaker next week and kind of lag into Christmas, although I don't think it's a sharp break. But the wholesale beef and pork continued to give up ground. On the hog side, we were out lower early in the week, and then we saw a big round of buying, specifically in the February on that contract, the deferred contracts. The December contract struggled with the fact that the ash index just continues to leak lower. Now, we're going lower. This week, I'd call it more of a leak. It just kept leaking lower. It can't get turned around. I still think we're about to hit that index low that won't be below $83. I would not think, and a little bit bounce into mid-December, which should generally be the story. But overall, the demand's held up pretty good. But this time of year, kind of those holiday orders have been built into the market. The Packers have met that demand. Now with their margins tightening up, you're going to see them try to push the wholesale prices higher by cutting the kill just a little bit. On the week, December cattle 153.35, 27 higher. February 155.87, up 75. January feeders up 4.15 at 182.45. Of course, the cattle supported by primarily the fact of the big 30-cent break at corn on the future side. March feeders 185.27, up 3.72. December hogs down $1.35 at 82.42, but off the contract low. But they did end up with lower, and February hogs up 192, closing at 90.42.
And that's Darrell Holaday, Country Futures in Frankfort, Kansas. You can always learn more at their website. That's countryfutures.com. Again, countryfutures.com, the website to visit. Do remember, trading futures and options involve risk of loss. May not be suitable for all investors. Do consider these risks before investing.